Hey everybody, it's the Crypto Sniper. Quick update for you. So this is your lovely Bitcoin chart, and you're asking me what guidance do I give for what likely comes next? No doubt. Any other questions? Please feel free to leave the comment below, but I'm assuming that's one of them. So here's my take on where we are with Bitcoin. Let's go to the chart. So you'll see I've got this capping orange moon over our Bitcoin price behavior. This is the problem of slowly descending marginally higher highs. In other words, the rate of ascent is actually decreasing till eventually you got the sell-off that we had with the whatever it was sell-off. Some people trying to make store of something to do with SpaceX and other narrative. People will attach any narrative. The fact is it sold off. And that's what a technician cares about. The fact that there was insufficient support to hold it there, and we were warning. And we did say that one of the things that are concerning me, I'm on Gemini at the moment. I vary between the exchanges here, but different exchanges have a different low here. And I'm going to tell you why that's becoming an important point right here, right now with you, why that's becoming an important point. So first of all, what about these higher highs and then that low that I've just raised? So that was kind of the top of what was low volatility into a nice little move up that then had quite a substantial pullback, kissed the key round number 20K. We've covered this before. We got you in on there. Up. Then you got a little wind up in there and you made your next localized high. So that was localized high 1. That was localized high 2. We'll do it in Greek letters 2, shall we? There she goes. And then you got your falling wedge into the return move 2. And we did warn that that could happen. And we even said you might be able to try a 24 point all the nines entry. And you would have got filled and you would have got another almost fairly immediate move away from your entry and away from any natural stop that you would have placed. Both there on that entry, if you had a stop in there, and here on that entry. However, that's where the good news for the bullish side started to look a little bit more ropey. First of all, we paused after we'd made a marginally higher high, and that turned out, but for a little spike there, probably the final high so far. I'm going to go Greek Zorba 3 here with our 1, 2, and 3. So that is your series of localized highs. And of course, as we've highlighted many times before, but for some people who might be just watching the channel for the very first time, it also came at this bear flag, which has this key critical level running through there that has proven hard to overcome. In fact, we get inverted HVF structure, and there's other things going on here that I won't get into the weeds of, but there's a key resistance level. Now, we were anticipating, because we'd called a reversal here, remember the reversal, that's left shoulder head. For people who've been watching this, they can draw this thing in their sleep by now, but that inverted head and shoulder, the head's a bit heavier than that, should have drawn it like that. That head and shoulder was a reversal pattern, and the momentum at which initially you broke was encouraging. In short, everything pointed to the fact that there was a potential for a new bull market commencing here. There's that very bullish surge all the way from 19.9 well into the upper 20s, close to 28,000 plus. So that was a very, very key moment of momentum. Apart from the falling wedge break, we actually didn't get the degree of follow through we needed. And we continued to gestate, pull back, and have very long, lengthy pauses. So instead of the marathon runner that just stopped at the table and swigged a quick water and jogged on, he was hanging at the tables and feeling stiff and visiting the nurse tent for a bit of a back rub and a massage of the calves. So this was showing signs of real fatigue, is what I'm pointing to. Now, this downturn is a concern. Here's why. Because the potential for the next structure is one where you have effectively a run of the 25K here. Now, on Gemini, it's not quite. On other exchanges it is, but that you've had 2 successive meets back down at our blue level, which again was that neckline for this structure, has now turned into something which is rounding out as per the orange line, which I'll now remove if it'll let me. There we go. Let me remove it. Hey, yokes are full of nonsense today. Let's get him off. Thank you. So now what you're getting is, and you're getting a marginally higher high, and potentially you've come down to that neckline. Now it's far from being perfectly clear on Gemini. It looks like it's stayed a touch above. Well, guess what? On Gemini, that neckline, instead of being 25k, could be 25.5k. Instead of being the perfectly same neckline as the inverted, it's quite natural to get close necklines. But you have a problem that what comes next is going to be a weak rally. Now, I want to highlight that we're on the 2-day time frame, and you've already had, if we look at this, and I'm going to drill in a little deeper on this because we're doing all our work here in the bottom right, so let's get a bit more space and boost this a little bit. You've already had 2 days complete there, and you're in your next 2 days, and you haven't had a quick bounce. One of the best ways to bury a bad day is to snap back, rally violently, like that. The minute you stop and pause and it hangs and there's a sustained long period in the lower state, you are not showing buoyancy, and it is more likely that the eventual response will be weaker and that you are unlikely to retrace the initial momentum of the downside move. So let me say that again in English. You're not going back easily to there. Given how hard you came down and how long you're taking as a 10 count. You've been knocked to the ground, and instead of, that was a fluke, you didn't even hurt me, bounce back up, throw the right hook, you're lying on the floor gasping and taking the full 8. That is not the story of a bull market. And this revisit very, very close, and I'm highlighting to you Gemini here, but if we go to one of the other exchanges, I'm going to keep the lines off there so they don't get over busy. You will see that actually on the likes of Bitfinex, you actually traded lower on the wick of this capitulation than you did on the falling wedge. So you already have met the criteria for me to put a 25k neckline in here and start scenario casting. Of course, all my lines pop up again, so I'll make them go away because they got awful mess. But that is quite clearly on that exchange and already ready. We call this armpitting, where you've made two clear points have made a key round number. That will be our horizontal price point, armpit 1, armpit 2. There you go. And in short, the super low vol but stunned, I call it a stunned bit of price reaction. This is not low volatility on account of bullishness. This is post-trauma, stunned. That is not just a slap in the face, it's a running, kicking around the head. And that is sitting in the corner, dazed and confused and stunned. That is where you are with that price behavior. 2 days, 2 candles, gone nowhere. Sitting, sitting, sitting. There is no immediate reaction snapping back. There is no vitality and there's no energy to do that. We haven't put the volume histograms on here, but it should be pretty obvious to most that the volume of the sell-off will be the dominant one, and that everything since has been a little bit stayed. See if we can get that. Very low volume, and the volume of the sell-off was relatively high. Not extremely high going in here, but it's quite clear there was an air pocket and a lack of bid stack coming up. In short, retail traders just want in. They're market only guys. They never waited for a price to get delivered and never thought that a market could ever pull back. Yet they're the first to tell you all gaps close on the CME, even though they're not gaps, Francis. 95% of the time. Well, no, it's not 95% of the time, but that's like saying every time you trade past a point, you will never come back to it. Of course, most times you pass that point again. It's very rare that you blast off and never visit a point again. Even for a longer journey, as you can see here, you revisited this point over here. So every price point gets regularly covered by the price behavior. But anyway, don't let me digress into gaps right now, particularly ones generated by the CME that chooses not to work weekends when everybody else does. So that is the concern I have. Strong to the up. We broadened after we got here. You could see that, a show of a loss of momentum. You didn't die though, you went into a contained fall, which is the low volatility squeeze of the falling wedge that allowed you to have vigor to bounce back up, that actually saw you make a higher fall, but the higher high. But this time, when you got your falling wedge, you did a type 3 spiller, a thriller all the way to the bottom. And in actual fact, you now have two parts of a potential head and shoulders in situ for a later crash. But here's how you get numbed to this, that you think you'll be okay. You see, the dollar has actually been strong during this period, and now it might just take a little bit of a break. So what happens? This guy may just, in fact, work his way up. But I don't think he's getting back up to the beginning of the fall up top here, and I certainly don't think he's beating the previous left shoulder in terms of its height. In short, my expectation is you will turn quite likely before the 29k, most on balance of probabilities in terms of my assessment. Can I be wrong? I absolutely can be wrong. Announce an ETF tomorrow, pump the crypto market, and who knows what could happen. Everything will be fine. You could get a broadening structure and you could go up again and make another higher high up top here. Let's draw that with a straight line. So there's lots of possible things that could happen. They're just slightly less likely than what's currently on the table. You could do that and go all the way up to there and still be later bearish. But I think the head and shoulder has a real chance. Why? Because of interest rates, dear friends. Interest rates are not looking good. Interest rates are continuing to climb on debt and bonds. The dollar may rest. We're going to go to the Dixie in a second, and that's going to give you a little bit of upside drift for Bitcoin to get some recovery. And that's going to anesthetize and numb everybody back in the FOMO brigade, only to potentially find themselves back down at 25k, looking at a possible head and shoulder. The bad news is, if that were to happen, the bad news, and by the way, book a call. We go into much more detail on this, and there are actual shorting opportunities that we're looking at on specific tokens. I didn't mean to do that. On other tokens where we have what we consider to be inverted HVFs that will actually see substantial percentage possible reductions if they get triggered, all of which that could come about as this takes place. So some form of shouldering. It could even just be a simple flag and doesn't have to go high. It could go higher, it could come up somewhere here and then come down hard. The problem we have is the momentum. The last period of momentum was here, that candle for Bitcoin, and actually the most recent momentum is now one of red, and it took back everything that the green one gave you. So to say that again, it took it all back. So not only was that momentum fake and fluffy, it got brought right the way back, and it's staying down. It's staying down. So momentum terms, not good. Not good. On balance of probabilities, what does that see? Well, you get a high not too far off the 32 in rough terms. A neckline round the 25k. That is going to give you a quite simple 7k, and a 7k dip from there could bring you back down to the 18,000s. 18,000. Now that would invalidate the original bull. There's the right, my apologies. Yeah, it is right shoulder, sorry. There's the head of the original inverted head and shoulder, which was bullish and looked like it was going to carry momentum to the next leg. There wasn't sufficient follow through. If this continues, the journey is changing. The journey is changing. Why? Well, the dollar changed, and I covered that in the last video in a lot of detail. So I'm not going to redux that whole video. You really need to see the previous crypto video. I did a lot of preparation for that. I did a lot of charts for that. And I showed you from a combination of tech, dollar, and many other charts. I'm not going to be showing them again. because we need to keep these videos short and cover new territory with us. But we've also seen a little bit of skidding in Bitcoin's dominance coming down. But generally, I should think that Bitcoin will probably end up doing a tad better when the sell-off occurs, and that it might go like that, even though it may be going down. And that's going to be a little bit of a concern for the likes of the altcoin market. We've got to remind you, Bitcoin versus the tech stars, not doing great. Not doing great right the way back down. In short, the bump that it got also seems to have a very characteristic look, only it's more developed. It's your future you in head and shoulder land, already beginning its downside journey on account of the fact that it's underperforming tech on the upside and actually selling off with tech and being higher beta, underperforming, in other words, going down more on the downside. In short, Bitcoin is not being an asset class of choice right now. Where would that neckline be for Bitcoin versus the NASDAQ? Roughly there, and you are already on your way down after a right shoulder from that. So that's Bitcoin against the tech market. Gold has been a bit anemic and is less interesting right now, but I would also point out that overall overperformance of Bitcoin, particularly on that last surge over there, is now being overtaken, and you have probably broken out the base end of a broadening structure after a bullish move. So an ascending broadening structure there, sitting on your bull pole, and now skidding through the basing ascending grind line. Stunned right now, return move and sell off would be my expectation. In short, I'd rather be in the lower beta gold, even though it's been going down, and actually silver is overperforming gold right now, than in Bitcoin. And the safest thing, ironically, again, would probably be USDT if you're in crypto. Okay, so we said we'd take you to the dollar, so let's do exactly that. So the dollar index has seen the dollar spoil a downside pattern. So at one point we were actually suggesting, incorrectly by the way, that the dollar would fall to the 97 level. We think that's now incorrect. We don't think it's probable to happen, and we think that pattern has been spoiled. So when we see patterns, we call the target of the pattern, and the progress was very, very strong, and you had your 100 run, and we expected a technical rally at the 100 point. Only thing is that rally never stopped. It came, and it invalidated our expectation for the structure over here. Now there were a few things that weren't perfect with the structure. These two were very much the same. In some instances they were exactly the same. There was a heavier candle body at this low 2 than there actually was a low 1. It was far from a perfect pattern, but it was worth of a draw, and it initially triggered with real momentum. This was dollar weakness, but now we are facing that BRICS moment, and our expectation is the dollar will actually prepare to be far more strong in the face of rivals than most people expect. So what's our expectation for the dollar next? If we have a look at this, you can see that it's had, over the last 2 days, largely been trading up. I'm going to just remove that invalidation point. You can see the nose put through. It's just pretty steady, low vol stuff. There's nothing too melt up about it. Let's just reframe that a bit. It is having a moderate pullback right now, but not too much. What is driving the fact that the dollar's been so strong? Well, debt has been climbing. Debt markets have been climbing. I'm not going to do too long on this because we also cover this thing in the market sniper, but you can see the debt markets are absolutely running, and we expect this to run the 4.75. This is the 30-year, and we actually expect that the 10-year to potentially even close the 5% mark. We have targets for it up to the 5% mark. So go and watch our traditional markets sniper channel to see more on the debt market, but this has been really strong, and it was a slow starter in both instances. Slow starter, you saw it broke, came back in a falling wedge, but then since this point, roughly 19th July, up, 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 and at 'em, and making great progress to the upside. That is the yields on debt going up. That is debt devaluing as the rates go up. Remember all those peak pivot callers? Whatever happened to the pivot callers? We said don't listen to pivot callers. They're going to start calling pivots too soon. They're going to call tops too long. Debt has got to be devalued, and it's quite likely we'll have a disorderly credit event as a result of this, and this could have meaningful impacts on your bank balances, by the way. So please bear that in mind. Make sure you put your currency somewhere safe outside of banks, maybe tied it up in silver and gold, bullion vault, links below, you name it, pure gold, links below. The chance of banking crashes are definitely all around. Okay, so we've got bullion orders to put in, and we've got rates that are going to go up through to 5%, and we've got trouble that's going to cause. And that's going to cause trouble not only for individuals who are being crushed by the debt, homeowners who can't afford to leave and are locked in their homes in their current home deals, plus also, yes, corporates who can't make rental checks, can't make wage bills, and can't pay debt on their borrowings. That is what's going down, my good friends, and it's a problem. So in terms of this, there's likely now that things are getting disorderly for a degree of disinflation to come. We're going to have a nasty event. Now, one, they could plan an event to coincide with the credit event to mask it, such as a climate or a Mark II, you know what, starts with F, L, and then U. And that could be not too far off, September, October coming, in which case lockdown, fan down, all the same again, pump the money where it's needed. But I can say to you that the interest rate climbing is not just an American phenomenon, it's happening right here in the UK. You can see this has gone beyond on the UK 10-year yield. Italy we've been watching and expecting to break out to the upside. We expect this fella to break to the upside. There is a lot of debt that is going to devalue with their yields going up. This particular yield is 5.749 we expect on the Italian. I'm not sure I gave a target. I'm not sure I even did that on the 10. We had said 4, and then the next journey would be 5. And here is your key 5 number for the UK side of things. They're already a lot closer to 5 than the US is. So these are negatives. These are contractionary events. This is probably going to drive strength again into the dollar. So you could see emerging markets battle FX currencies. You're certainly seeing China battle right now, and the BRICS might turn out to be, despite their bells and whistles and their great show, a little bit of a damn squid in terms of the aftermath and free market feel of whatever they announce, unless it's got some real bells and whistles. And I seriously doubt they'll do any gold convertibility on that. So overall, there's a little bit of a cloud over crypto. There's a little bit of a cloud over crypto. We did, of course, call total for Head and Shoulders, and that did perform. So we highlighted this fella. We shared it on the Twitter. I didn't mention it in the last YouTube, I think the one before, that you would have a Head and Shoulder here and here. And there was one similar on Ethereum. Of course, that one made target, and so did this one. Our problem, though, is that all? Is that everything? And I'm not sure. I'm not sure I'm ready to say that. I fear that this, instead of spiking up like this and being full of zeal and the joys of spring, that there could be a bit more inertia. This traded down and held long and kept going lower for a bit. So, but we've already hung around here for quite a bit. If you look at this daily, 1, 2, 3, 4, and we're starting the 5th day. I'm still in the 4th day. But that's quite a lengthy spell to take the 10 count after running a target. That said, I don't run in short straight after a target's been made. Second Head and Shoulder target made. Boom, bosh, straight and simple stuff, just like it was here. In fact, it was quicker this time than the time before, and you failed to make a higher high on that one, and you came down harder. So the momentum swings have turned. There's a real concern for me in and around that. When I look at total 3, you didn't get much of a second rally at all here. A lot of it's going to be dictated without Ethereum. It's going to be dictated by the likes of Ripple and Binance, and they of course got brought down fairly hard recently. So I want to get something straight to people who are Ripple investors. I have to keep saying this. People just don't get it. This is a macro structure. Okay? That means it's got a long way to go, and it needs a full third high, which I've said before, needs to run over $111. So $1.11. Let me get that correct. $1.11, $1.12. That needs so you need to do that high, which you haven't done yet, and then you need some time to rest and come back and go quiet. We haven't had a third impulse in here, and then you get to break and go up and make your target, and then we will have a hard target. We're giving you a guidance $16 to $17 target, because we're guessing where stuff that is yet to happen will happen. So when you're looking at big monthly charts, you do not get your reward the next day, the next week, or even the next month. We got a great reward because we jumped in on a particular structure, and that's why we took in our community profit off, some profit off. And you should have. And I warned other guys to get out even at the 70 cents levels, that we were concerned now that there was going to be a likely pullback. So understand, it's a long old journey. You can see that had a run up over here. So there's a couple of examples of things to show you. That had a run up, only to be totally engulfed and come back down, and then still go up in the end. But for that month, it was a horrible month. That red one there. You can see them now. There was also a period here where everyone thought that would be the low, only for it to go lower. Maybe this is the low, only for it to go lower. We don't know that for sure, and it could extend. It could extend. I don't think that's going to happen, but it's possible. Things extend. Stuff happens. They throw in a demand-destroying event. Stuff happens. So please understand, if you are trading the XRP for the potential upsides that it may offer at some point, that it's not necessarily about to happen straight away. We need a third impulse. We know the criteria. We discuss this all the time in the community, along with other things. And I actually think there's scope for a couple of things to sell off. There is a possibility Bitcoin gets head and shoulder. Doesn't mean a guarantee, but there is a possibility. And I'll be watching for a little bit of a rise. So if the dollar comes back, let's just finish this scenario, and I'm going to leave you there. If the dollar comes back down a little bit, and go back to the daily, if the dollar comes back down for a little bit and you get a small rest out of the dollar, you could in fact during that period have a little bit of a bump on the right shoulder. Do not be fooled by soft, modest bullishness on a weakening dollar. Please understand, it is two markets you are watching: Bitcoin and the dollar. The dollar may be about to have a tiny rest, could even be a medium-sized rest, could bring it up quite some way, could bring it up just a small amount of the way. We can't tell you that at this point. However, if we get a disorderly descent back down to the 25k level, we will be preparing for potential shorts on Bitcoin. That's right, you heard it. You hate us, that's okay. The game is to preserve capital, protect with tight stops, build money in bull or bear markets, and within all of that, set ourselves up for reset wealth. And for that, you're going to need trading capital that you protect. You're going to need platforms, and you're going to need structures and many other things. for your preparation for your wealth preservation. And we detail that in greater detail as well inside our community. If you feel like it, book a call below on the details in the description, that first below. And you can also see what we are looking at that may short, what area of it, that's right, what area. There is an area that this particular token is in. We feel it's going to be DeFi, so you can go and look if you want, if you think you're going to work it out. We have a good structure, we know exactly what we want, and we might be taking that to the short side. And it represents quite a substantial, I'm talking about 40% plus loss in value. So if you shorted, let's say 100 grand of that, that would be $40,000 in profits you would make if that target was made. And the risk that you will pay for being wrong will be less, and the probabilities of outcome in it, is we think, will be proportionately more in your favor than that risk reward ratio represents. Okay, for all that and our secret trades that we are looking at and our setups inside our community, book a call on the link below. Till next time, I'll catch you later. Thanks for watching.